The year 2022 has begun with a bloodbath in the stock markets. The indexes are all in the red, and many popular tech stocks are plunging to new all-time lows. With the market in such a state of flux, many people are beginning to wonder if the home market will be next. After all, nationwide price rises have pushed millions of potential purchasers out of the market. Is this going to be their last chance to make a move? Well, it is understandable that there is a link between stocks, the economy, and the real estate sector. Let's dig deeper, and we'll discover some surprising data about the market in 2022. So is the real estate market on the verge of collapsing? But before we discuss that, please accept my warmest greetings if this is your first visit to our Smart Stocks Academy channel. To be the first to know when a new video like this is released, hit the like button, subscribe, and click the notification bell next to it. Now let's get to the topic. In December of 2019, the average price of a home in Tampa was $284,000. That same home, if put on the market today, would most likely receive bids in the excess of $450,000, an astronomical increase that most people will dismiss as a bubble. Now that the S&P 500 is in free fall and several tech stocks have been demolished, many people are looking to places like Tampa for similar price activity. Glenn Kelman, the CEO of Redfin, was back in CNBC to discuss his housing predictions for the coming year. Given the current position of the market, the assertions are startling. Now give it a listen.
Yes, it is. It's still on a tear. The housing market won't give up. People are starting to worry about inflation, though.
Are you concerned? Has it been too hot? Because I'm interested in some of the notes you've shared and the data we've had. It kept soaring even as transaction volume fell, which can be occasionally an ominous sign.
Well, inventory has just been so low. That's been the gating factor on sales volume. And now you have about 3/4 of home buyers being significantly worried about inflation. For some people, that means they want to hurry up and try to buy a home before interest rates increase, but others are starting to step back from the market. We have done an unusual number of consultations coming into this home buying season with people who want to prepare their homes to list. So we're expecting to see more inventory for the first time in about a year, and that should drive more sales. But my guess is that the housing market will have a shorter season than usual because interest rates are going to start increasing through 2022.
So despite recent stock market developments, Kelman is essentially predicting that the housing market will continue to grow at an absurd rate. He points out that inventory levels are extremely low. Looking at the supply chart on their own website, we can see that their inventory levels were about 2 million in the winter of 2019. Now, with roughly half the supply and presumably even more demand, that the number has dropped to 1 million. Despite the fact that winter is traditionally the season with the lowest demand, 43% of properties today sell for more than the asking price. Although inflation has increased, despite record-breaking CPI statistics, it appears that people are not concerned about the surge just yet. According to Gallup polling, only 8% of Americans believe inflation is the most pressing issue facing the country. It is the highest percentage in decades, but it is nothing compared to the 1980s, when nearly half of the country thought it was the most serious threat. We still have a long way to go before society exerts significant political pressure to address this issue. Sure, interest rate hikes are coming this year, which should slow down buying, but given the incredibly low inventory levels and the shift in view of what constitutes as a good deal, I believe we'll still see big price increases. Both Redfin and Zillow concur, and their forecasts for this year have been adjusted. The state of Florida is at the heart of this real estate discussion. Prices have skyrocketed, leaving many people wondering what the future holds if the current trend continues. Mr. Kelman was ready to bring up the topic and use it as an example of how bizarre things might get. Let's give it a listen.
And in terms of where things remain incredibly hot, there's one state in particular that stands out.
Florida. Oh my gosh, Florida. Everybody's leaving New York for Florida, both Tampa and Miami. So New York is the #1 origin city for people moving, and Miami is the #1 destination of the 5. or excuse me, of the 10 hottest neighborhoods in America, 5 of them are in Florida. So we're seeing it on both coasts. It's been incredible, both the Gulf side and the Atlantic side. Florida just has low taxes. People are drawn to the warm weather, especially this time of year. The migration has been intense.
What's fascinating about this part of the country is that it frequently serves as a predictor of what the rest of the country will face in the future. Everyone recalls the 2008 crisis and the big housing bubble that contributed to it. Did you know that the housing bubble in Miami burst nearly 2 years before the Great Recession? In 2006, the Case-Shiller Index, which tracks average home prices, peaked in Miami. That was more than a year before the rest of the country fell into a record slump. Looking at that chart today, it is simple to see the huge growth we're seeing, but the crest has yet to develop. The housing market is still on a near parabolic trajectory with no signs of slowing down. This, in my opinion, is the indicator to look for when trying to predict the peak before it occurs. Right now, I don't see it, and there are numerous reasons why most experts believe that, despite the absurd pricing, today's housing market is still healthy from a bank standpoint. Listen to Redfin's CEO describe the situation.
Glenn, going back to the broader housing market, you said we're going to have a shorter season this year as people try and rush to get ahead of rates going up. What happens when we get to that moment? Is it a big correction for the market? Is it a plateauing? Are you fearful of a major correction?
Well, I don't think we're going to see anything like 2008 just because people aren't over their skis with their mortgage payments. So the people who are buying houses now can afford them. Their credit ratings are high. We're unlikely to see a major wave of foreclosures. What you will instead see is just a slowing in home buying demand in the second half of the year if interest rates get above, say, 3.5% for a mortgage. And so my guess is that we'll see a repeat of 2018 when rates increased in the second half of 2018. There was a step back in home buying demand, but because inventory is so low, I don't think that there's going to be a significant step back in prices. We can't see the kind of price appreciation we saw over the past 2 years. That's unrealistic, and in fact, it's undesirable. But I think we can see stable prices, reasonable home buying demand. We're still way above 2019 levels. It's close to 6.5, 7 million units of sales at an annualized rate. That pace is probably going to come down at least 1 or 2 notches.
That concludes the discussion. The CEO of Redfin, it appears, does not anticipate this wild market reverting anytime soon. His claim is supported by data on delinquency. When it comes to single-family residential mortgage delinquencies, the numbers are extremely low. Sure, the numbers aren't as high as they were in 2006, but they aren't as high as they were prior to the 2008 recession. In fact, after peaking in the first quarter of 2010, we appear to be moving lower. It is doubtful that a housing correction will occur unless the data changes. Most commercial banks now are issuing sound loans, with rates so low compared to historical levels. Affordability is sometimes greater than you might imagine when looking at houses just through the lens of the sticker price. When looking at the graph of mortgage debt service payments as a percent of disposable personal income, it is clear that we are at historically low levels. According to this graph, property prices would have to more than double before reaching levels comparable to those of 2008. With the markets in free fall and Fed Chair Powell considering 4 rate rises, including a possible double hike in March, the real estate market is in for a wild first quarter. I'm sure Kelman will return to CNN to discuss the statements, and I'll be back to evaluate them. And with that, today's video comes to a close. To express your love and support for this video, don't forget to hit the like button if you haven't already. Also, subscribe to the channel by clicking the subscribe button below and click the notification bell right next to it to be the first to know when a new video is posted. Thank you for taking the time to watch, and we hope you enjoyed yourself. We look forward to seeing you again soon.